Man, NIO Stock is absolutely crushing it, and I don't even know where to begin with this video because I have so many things that I want to talk about. I mean, the last time I made a video about NIO Stock, right? If I'm not wrong, it was trading around $13. At that point in time, I gave you guys my full bullish thesis and told you guys why I decided to stick with NIO Stock and why you should too at $13. And look at how over time, more and more investors are finally opening their eyes and believing in NIO's growth potential. Right now, NIO is currently trading at $48, and by now you would have definitely made more than 3x your initial investment. Well, that's if you have actually already sold for profit at this current price. In fact, I know quite a few folks out there who's already had a big massive gains, and the crazy thing is 9 out of 10 of them are not even thinking of cashing out on this massive gain yet. And so we gotta ask ourselves, are these people in their right mind for holding at this current price, and if it's too late to get in and make money off the stock? Obviously, compared to a couple of months ago, it was much more easier to buy and hold at that price point compared to today. It's just much more intimidating and scarier than it has been before, right? That's why for today's video, there are two things that I really want to achieve. First up, I want to debunk a bearish article that I came across recently and I think was absolutely ridiculous in my opinion. I mean, sure, I do understand this analyst's perspective and concern. I cannot deny the fact that NIO has indeed hyper surged to over 500% in only a matter of months. But at the end of the day, there are a few things that we need to keep in mind. We'll get more into that later. The second thing is I want to talk about NIO's upcoming catalyst that I think will drive NIO stock up to $80 by the end of 2020. So basically, I'm giving you guys my new full bullish thesis. Let's get to it. So here we have Ian Basic. He says 3 reasons why NIO stock isn't the next Tesla. Okay, yes, I get it. NIO isn't the next Tesla. In fact, I totally agree with his statement because there's no doubt that Tesla is currently the market leader in the EVs industry, accounting 18% of the total global market share. And then he mentioned that NIO has enjoyed an incredible turnaround this year, but the valuation of NIO stock is excessive at this point. He also says that NIO isn't comparable to Tesla 7 years ago. NIO is not a market leader, only selling 50,000 vehicles over the past year and having to compete with a saturated market in China. Lastly, he gave his verdict and argues that investors are paying far more for NIO share now than they did before for Tesla. At that time, Tesla had a market cap of just $5 billion, yet NIO's market cap is already up at $30 billion despite offering investors far less in terms of results. Now, see, this is where it really irks me with his bearish thesis, because in my opinion, these are not even a legit comparison. Because first of all, if we ask ourselves, are the EVs demand or global warming awareness comparable back then in 2013? Is the Chinese government pushing for zero emission vehicles back then? No. The answer is a resounding no, because we know for a fact that EVs will disrupt the auto market industry for the next 10 years at an even quicker pace than ever. It's clear that demand is much more bigger than it was before. Chinese government is serious than ever in pushing for zero emission vehicles, providing huge incentive for battery swapping companies in particular, and that means back then in 2013, there was simply no reason or incentive for people to change from gasoline vehicles to EVs yet. But now that these people have a reason to change to EVs, there's no way that the valuation based on the future outlook should remain the same as Tesla back in 2013 in my opinion. And if we go by the article's logic, then why the heck is Ford's market cap currently at 30 billion despite having massive 5.4 million vehicles sales in 2019 alone? I mean, theoretically, Ford should have larger market cap than Tesla and NIO combined together. The simple truth is, NIO is not a bubble, and I have no doubt that as long as NIO continues to play with the right cards, which they are, NIO is here to stay, alright? Okay, next, speaking of playing with the right cards, let's talk about the upcoming catalyst that I think will drive NIO stock to $80. Look at this here. NIO delivered a new record high monthly deliveries of 5,055 vehicles in October 2020, increasing by 100.1% year over year. The deliveries consisted of 2,695 ES6, 1,477 ES8, and 883 EC6, bringing cumulative deliveries to 63,343 vehicles. Look at how NIO has proven from time to time, yet again showing strong delivery numbers, and how each of every one of these delivery numbers gave NIO a boost in the stock price. In less than a month, NIO already received its third upgrade. As of September, China's auto production and sales have been growing for 6 consecutive months this year, including 5 consecutive months in which sales have been growing at a rate of more than 10%. And look at this, as recently as end of October, CN Tech Post reported that new ES6 delivery time will be extended to 4 to 5 weeks as new Shanghai policy spurs local demand. Shanghai Security News quoted NIO salesperson as saying previously the ES6 deliveries took 2 to 3 weeks. Now it has extended to 4 to 5 weeks because there were too many orders. Literally just before this extended deliveries, NIO was already setting record high months after months. So anytime when you are thinking of selling NIO stock, remember that NIO will beat the monthly delivery numbers. Remember, in July, there were 3,533 deliveries, 3,965 in August, and 4,708 in September. So the October deliveries were up 8% over September and up 28% over August. Now, as we all know, we are approaching to the most exciting time of the year. According to the research team at Huatai Securities, the auto industry is expected to continue to maintain a high level of prosperity as the fourth quarter, which is usually the peak season for auto sales. And what it means for NIO entering into the fourth quarter in 2020 suggests that NIO is going to show an impressive quarter, I believe, than this upcoming third quarter. I mean, look at the respective fourth quarter over here in 2016, 2017, 2018, and 2019. History has shown from time to time again that fourth quarter is the best time for car purchase. Honestly, with the strength in orders and rising awareness in electric vehicles, I believe NIO stock has what it takes to hit $80 faster than we think. And also don't forget, we have the BAS system, Robotaxi with Mobileye, increasing production capacity to 150,000 units in 2021, full self-driving technology, NIO Sedan ET7, Tencent and Chinese government backing. And don't forget that the battery pack is getting cheaper and cheaper as well. In 2013, cost of 1 kilowatt hour cost about $650, which means standard 75 kilowatt hour is going to cost you roughly about $48,000, while right now a 75 kilowatt hour will only cost you about $10,000, which means that the one main deal breaker is no longer an issue. NIO also has a better price to sales multiple of 13.5x based on the projected 2020 revenue model, which means that NIO is actually growing at a faster pace than Tesla in 2013. Honestly, I could go on and on to elaborate, but I think I'm gonna end this video here because I'll leave this for another video on another day. The main point is, ignore what the analyst says about NIO's profitability because at the moment, NIO is all about growth and branding. And as long as NIO continues to show itself in terms of deliveries, I think NIO is going to be massive for the next few years with some revenue numbers. I hope you guys enjoyed this video. As always, please subscribe and hit the thumbs up button if you want to learn and watch more on my elaborated NIO research. Also remember to still do your own due diligence. Till next time.